The evening rain had just stopped. Nand and Nilkanth were sitting on a wooden bench overlooking a quiet lake. Nand had brought a notebook filled with financial notes he had watched over the past few weeks. He closed the notebook and looked at Nilkanth. Every day I hear new financial terms: assets, liabilities, SIPs, inflation, CAGR, market capitalization. The more I learn, the more I realize how little I know. Nilkanth smiled. That's a good sign. How is that a good sign? Because people who think finance is easy usually stop learning. People who realize how much there is to learn continue improving. Nand nodded. So where should I begin? There are thousands of financial terms. Which ones should every person understand before investing a single rupee? Nilkanth opened Nand's notebook and wrote a title. The 30 financial terms everyone should know before investing. Master these, Nilkanth said, and every financial book, YouTube video, and annual report will become much easier to understand.
Nilkanth, what exactly is a budget? People keep saying I should make one. A budget is simply a plan for your money before you spend it. It ensures every rupee has a purpose instead of disappearing without you realizing it. So, it's not about cutting down every expense. No. A good budget helps you cover your needs, enjoy your wants responsibly, and save and invest consistently for your future. I understand now. A budget doesn't limit my freedom. It gives me control over my money.
Nilkanth, what is an emergency fund, and why do people say it's more important than investing?
An emergency fund is money set aside for unexpected situations like a job loss, medical emergency, or urgent home repairs. It acts as your financial safety net. So, I shouldn't invest every rupee I save? Exactly. Without an emergency fund, you may be forced to sell your investments or borrow money when life takes an unexpected turn.
I understand now. An emergency fund doesn't grow my wealth directly, but it protects the wealth I'm working so hard to build. Nilkanth, I've heard the term cash flow many times. What does it actually mean? Cash flow is simply the movement of money into and out of your pocket. If more money comes in than goes out, you have a positive cash flow. So even someone with a high salary can have poor cash flow if they spend more than they earn? Exactly. Wealth isn't determined by income alone. It's determined by how well you manage the money flowing through your life. I understand now. A healthy cash flow helps me pay my expenses, save regularly, and invest confidently without financial stress.
Nilkanth, what exactly is net worth? Is it simply the amount of money in my bank account? No, Nand. Net worth is the value of everything you own minus everything you owe. It tells you your true financial position. So, if I own a house, investments, and savings worth 80 lakh rupees, but have loans of 30 lakh rupees, my net worth is 50 lakh rupees? Exactly. Your income shows how much you earn, but your net worth shows how much wealth you've actually built. I understand now. Instead of measuring my financial success only by my salary, I should also focus on steadily increasing my net worth.
Nilkanth, everyone says I should buy assets. But what exactly is an asset?
An asset is something you own that has value and can either generate income or increase in value over time. Examples include businesses, stocks, mutual funds, rental properties, and fixed deposits. So buying an asset isn't just about owning something, it's about building future wealth. Exactly. Good assets work for you by generating income or appreciating in value, helping you achieve your financial goals. I understand now. The more quality assets I accumulate, the stronger my financial foundation becomes.
Nilkanth, if assets help me build wealth, then what are liabilities? Liabilities are financial obligations that you owe to others, such as home loans, car loans, personal loans, or credit card debt. They require you to pay money over time. So every loan is a liability? Yes, but not all liabilities are bad. A loan that helps you buy a productive asset or increase your income can be useful, while unnecessary debt only reduces your future financial freedom. I understand now. Building wealth isn't just about buying more assets, it's also about managing my liabilities wisely.
Nilkanth, what exactly is interest? Why do banks pay it on deposits and charge it on loans?
Interest is the cost of borrowing money and the reward for lending it. When you keep money in a bank, the bank pays you interest. When you borrow money, you pay interest to the lender.
So, interest can either help me earn money or increase the cost of my loan?
Exactly. When you earn interest, your savings grow. When you pay interest, borrowing becomes more expensive. So you should borrow wisely.
I understand now. Interest isn't good or bad by itself. Its impact depends on whether I'm earning it as an investor or paying it as a borrower.
Nilkanth, I've heard Albert Einstein called compound interest the eighth wonder of the world. What exactly is compound interest? Compound interest means you earn interest not only on your original investment, but also on the interest you've already earned. Over time, your money begins to grow faster because each year's returns are added to the principal. So the longer I stay invested, the more powerful compounding becomes? Exactly. Time is the greatest friend of compound interest. Starting early and remaining invested patiently often matters more than investing large amounts later. I understand now. Compound interest rewards patience, consistency, and long-term investing, allowing my money to work harder every year. Nilkanth, when people talk about interest, they also mention the principal. What does principal mean?
The principal is the original amount of money you invest or borrow. Interest is always calculated on this amount, and in compound interest, it eventually grows on both the principal and the accumulated interest.
So, if I invest 1 lakh rupees, that 1 lakh rupees is my principal?
Exactly. Whether you're investing in a fixed deposit or taking a loan, the principal is the starting amount before any interest is earned or paid.
Nilkanth, every time someone buys a house or a car, they talk about EMI. What exactly is an EMI? EMI, or equated monthly installment, is the fixed amount you pay every month to repay a loan. Each EMI includes two parts. One repays the principal and the other pays the interest. So, every monthly payment reduces my loan little by little? Exactly. In the beginning, a larger portion of your EMI goes toward interest, while over time, more of it goes toward repaying the principal. I understand now. An EMI helps me repay a loan in manageable monthly payments, but I should always ensure it comfortably fits within my budget.
Nilkanth, what does liquidity mean? I hear investors say some assets are more liquid than others.
Liquidity is the ease with which you can convert an asset into cash quickly without losing much of its value. The faster you can access your money, the more liquid the asset is.
So, cash in my bank account is more liquid than a house?
Exactly. Cash and savings accounts are highly liquid, while assets like real estate may take weeks or months to sell.
I understand now. Keeping some liquid money ensures I can handle emergencies or opportunities without being forced to sell my long-term investments.
Nilkanth, everyone talks about inflation. What exactly is it and why should I worry about it? Inflation is the gradual increase in the prices of goods and services over time. As prices rise, the same amount of money buys fewer things than it did before. So, if something costs 100 rupees today and 107 rupees next year, that's inflation? Exactly. That's why simply saving money isn't enough. You need your investments to grow faster than inflation, so your purchasing power increases over time.
Nilkanth, you explained inflation, but what exactly is purchasing power? Purchasing power is the quantity of goods and services your money can buy. When prices rise because of inflation, the same amount of money buys fewer things, so your purchasing power decreases. So, if 1000 rupees buys fewer groceries next year than it does today, my purchasing power has fallen. Exactly. That's why your savings and investments should grow faster than inflation, so your money can buy more, not less, in the future. I understand now. true wealth isn't just about how much money I have, but about how much that money can actually buy.
Nilkanth, my investment on 10% last year. Does that mean I became 10% wealthier?
Not necessarily. What truly matters is your real return, which is the return you earn after accounting for inflation. It tells you how much your purchasing power has actually increased.
So if my investment earns 10%, but inflation is 6%, my real return is about 4%?
Exactly. A high return looks impressive, but if inflation is also high, the actual increase in your wealth may be much smaller.
I understand now. I should judge my investments by their real return because it reflects the true growth in my purchasing power, not just the numbers on paper.
Nilkanth, what does opportunity cost mean? It sounds complicated.
It's actually very simple. Opportunity cost is the value of the next best alternative you give up when you make a choice. Every financial decision has a hidden cost because choosing one option means not choosing another.
So, if I spend 50,000 rupees on a vacation instead of investing it, the future returns I could have earned are my opportunity cost?
Exactly. Smart financial decisions aren't just about what you gain today, they're also about what you give up by not choosing the best alternative.
I understand now. Before spending or investing, I should always ask myself, what am I giving up by making this choice?
Nilkanth, what does the time value of money mean? How can the same 1,000 rupees be worth more today than in the future?
Because money available today can be invested to earn returns. A rupee in your hand today has the potential to grow, while the same rupee received years later loses value due to inflation and the missed opportunity to invest.
So, receiving 1 lakh rupees today is better than receiving 1 lakh rupees 5 years later?
Exactly. Money has both earning potential and purchasing power, which is why time is one of the most valuable factors in finance.
I understand now. The earlier I save and invest, the more time my money has to grow, making time one of my greatest financial assets.
Nilkanth, how do I know whether an investment was actually worth making?
That's where return on investment (ROI) comes in. ROI measures how much profit or loss you make compared to the amount you originally invested.
So, if I invest 1 lakh rupees and later it's worth 1,20,000 rupees, my investment has earned a positive return?
Exactly. ROI helps you compare different investments and understand which one has generated better results for the money you invested.
I understand now. Before celebrating any investment, I should always ask, what return did I earn on the money I invested? Nilkanth, everyone says investing involves risk. What exactly does risk mean? Risk is the possibility that an investment may not deliver the return you expect, or that you could lose part or all of your money. Every investment carries some level of risk. So, risk isn't something I can completely avoid? Exactly. The goal isn't to eliminate risk, but to understand it, manage it wisely, and invest only in opportunities that match your financial goals and risk tolerance. I understand now. Successful investing isn't about avoiding risk, it's about taking calculated risks after understanding the possible rewards and consequences. Nilkanth, I understand risk and return separately, but what is the risk reward ratio?
The risk-reward ratio compares how much you stand to lose with how much you expect to gain from an investment. Before investing, you should always ask whether the potential reward justifies the risk you're taking.
So, if I could lose 10,000 rupees but potentially earn 30,000 rupees, I'm risking 1 to earn 3?
Exactly. Successful investors don't chase the highest returns. They look for opportunities where the potential reward is attractive relative to the risk involved.
I understand now. Before making any investment, I should evaluate both the downside and the upside because a good investment offers a favorable balance between risk and reward.
Nilkanth, I've often heard the saying, don't put all your eggs in one basket. Is that what diversification means? Exactly.
Diversification means spreading your investments across different assets, industries, or companies so that the poor performance of one investment doesn't severely affect your overall portfolio. So instead of investing all my money in a single stock, I should invest in different types of investments? Yes. Diversification helps reduce risk because different investments often perform differently under the same market conditions. I understand now. Diversification may not eliminate risk completely, but it helps protect my portfolio from depending on the success of just one investment.
Nilkanth, is asset allocation the same as diversification? Not quite. Asset allocation is the process of dividing your money among different asset classes, such as equity, debt, gold, and cash, based on your financial goals, investment horizon, and risk tolerance. So instead of putting all my money into stocks, I decide how much to invest in each type of asset? Exactly. The right asset allocation helps balance risk and return, ensuring your portfolio is better prepared for different market conditions. I understand now. Choosing the right mix of assets is just as important as choosing the right investments within each asset class.
Nilkanth, what exactly is equity or a share? When I buy a company's shares, what do I actually own?
A share represents a small ownership stake in a company. When you buy shares, you become a part owner and participate in the company's growth and sometimes its profits.
So, if the company grows and becomes more valuable, the value of my shares can also increase?
Exactly. But remember, if the company performs poorly, the value of your shares can also decline. That's why it's important to invest in quality businesses after proper research. I understand now. Buying shares isn't just purchasing a stock symbol. It's becoming a small owner of a real business and sharing in both its opportunities and risks.
Nilkanth, if I own shares of a company, how do I earn money besides the share price increasing? One way is through a dividend. A dividend is a portion of the company's profits that it chooses to distribute to its shareholders as a reward for their ownership. So, every company pays dividends? No. Some companies pay dividends regularly, while others reinvest their profits back into the business to support future growth. I understand now. A dividend is a share of a company's profits, but whether a company pays one depends on its financial performance and business strategy.
Nilkanth, if I buy a share today and sell it later at a higher price, what is that profit called? That profit is called a capital gain. It is the increase in the value of an asset, such as shares, real estate, or gold, between the time you buy it and the time you sell it. So if I buy a share for 500 rupees and sell it for 700 rupees, my capital gain is 200 rupees? Exactly. However, if you sell it for less than you paid, you incur a capital loss instead of a capital gain. I understand now. Capital gain is the profit I earn from selling an asset at a price higher than my purchase price, making it one of the primary ways investors build wealth. Nilkanth, I want to invest in the stock market, but I don't know how to choose the right companies. What should I do? That's where a mutual fund can help. A mutual fund pools money from many investors and is managed by professional fund managers who invest it in a diversified portfolio of stocks, bonds, or other securities. So instead of selecting individual stocks myself, I can let experienced professionals manage my investments? Exactly. Mutual funds provide diversification and professional management, making them a convenient option for investors who lack the time or expertise to research individual investments. I understand now. A mutual fund allows me to invest alongside many other investors while experienced professionals manage the portfolio according to the fund's investment objective. Nilkanth, I've heard many people recommend investing through a SIP. What exactly is a SIP?
A systematic investment plan, SIP, is a method of investing a fixed amount in a mutual fund at regular intervals, such as every month, instead of investing a large amount all at once.
So, I don't have to wait until I have a big lump sum to start investing?
Exactly. A SIP helps you invest with discipline, benefits from rupee cost averaging, and gives your investments more time to grow through the power of compounding.
I understand now.
A sip turns investing into a regular habit, helping me build wealth steadily without worrying about timing the market.
Nilkanth, when I look at a mutual fund, I always see something called NAV. What does it mean? NAV, or net asset value, is the price of one unit of a mutual fund. It is calculated by dividing the total value of the fund's assets after deducting its liabilities by the total number of units outstanding. So, if the fund's investments increase in value, its NAV usually increases too? Exactly. However, a lower NAV doesn't mean a mutual fund is cheaper or better than one with a higher NAV. What matters is how well the fund's investments perform over time. I understand now. NAV is simply the per unit value of a mutual fund, and I should evaluate a fund based on its performance and suitability, not just its NAV. Nilkanth, I often see mutual funds and stocks showing their CAGR. What does CAGR actually mean? CAGR, or compound annual growth rate, is the average annual rate at which an investment grows over a period, assuming the profits are reinvested every year. It smooths out yearly ups and downs to show the investment's long-term growth. So, even if my investment rises and falls each year, CAGR tells me its average annual growth over the entire period? Exactly. That's why investors use CAGR to compare the long-term performance of different investments on an equal basis. I understand now. CAGR doesn't tell me what happened each year, it tells me how fast my investment grew on average over the entire investment period. Nilkanth, many people think tax planning means finding ways to avoid paying taxes. Is that true? Not at all. Tax planning is the legal process of organizing your finances to reduce your tax liability by making use of the deductions, exemptions, and benefits provided under tax laws. So, investing in eligible tax-saving instruments and choosing the right tax regime are examples of tax planning? Exactly. Good tax planning is done before the financial year ends, allowing you to save more money legally while staying fully compliant with the law. I understand now. Tax planning isn't about avoiding taxes. It's about paying only what I legally owe while making smart financial decisions.
Nilkanth, I keep hearing people talk about passive income. What exactly does it mean? Passive income is money you earn regularly without actively working for every payment. Examples include rental income, dividends, interest, royalties, or income from a well-managed business. So, unlike my salary, I don't have to exchange my time every day to earn passive income? Exactly. Many passive income sources require time, effort, or investment to build, but once established, they can continue generating income with relatively less ongoing involvement. I understand now. The goal isn't just to work for money, but to gradually build assets that generate passive income and strengthen my financial independence.
Silence filled the air. After a few moments, Nand closed his notebook. I always thought financial education began with choosing the best stock. Nilkanth smiled. Most people think that. But investing is like learning a new language. If you don't understand the vocabulary, you'll misinterpret everything. He stood up and looked toward the calm lake. These 30 terms won't make you wealthy overnight, but they will help you understand every financial conversation you'll have for the rest of your life. Nand carefully underlined the title in his notebook. For the first time, he said with a smile, finance doesn't feel complicated. It feels like learning one word at a time. Thank you for watching. I hope finance feels a little simpler today. If there's any financial term or concept you'd like to understand, mention it in the comments below. I'll do my best to explain it in an easy-to-understand comic in a future video. Until next time, keep learning, one financial word at a time.